Hello everyone, my name is Yash Verma and today I am going to present on salient provisions of Banking Regulation and RBI Act. So what is Banking Regulation Act of 1949? So this act is a legislation in India that regulates all banking firms in India. Passed as the Banking Companies Act 1949, it came into force from 16th March 1949 and changed to Banking Regulation Act 1949 from 1st March 1966. It is applicable in Jammu and Kashmir from 1956. Initially, the law was applicable only to banking companies, but 1965 it was amended to make it applicable to cooperative banks and to introduce other changes. The Act provides a framework under which commercial banking in India is supervised and regulated. The Act supplements the Companies Act 1956. Primary agricultural credit societies and cooperative land mortgage banks are excluded from the Act. The Act gives the RBI the power to license banks, have regulations over shareholdings and voting rights of shareholders, supervise the appointment of the boards and management, regulate the operations of banks, lay down instructions for audits, control moratorium, mergers and liquidation, issue directives in the interest of public good and on banking policy, and impose penalties. In 1965, the Act was amended to include cooperative banks under its purview by adding the Section 56. Cooperative banks which operate only in one state are formed and run by the state government. But RBI controls the licensing and regulates the business operations. The Banking Act was a supplement to the previous acts related to banking. So, coming to the provisions of Banking Regulation Act, first one is prohibition of trading. According to Section 8 of the Banking Regulation Act, a banking company cannot directly or indirectly deal in buying or selling or bartering of goods, but it may, however, buy, sell, or barter the transactions relating to bills of exchange, receipt for collection, or negotiation. Then the second one is non-banking assets. According to Section 9, a banking company cannot hold any immovable property, howsoever acquired, except for its own use, for any period exceeding 7 years from the date of acquisition thereof. The company is permitted within the period of 7 years to deal or trade in any such property for facilitating its disposal. Of course, the RBI may, in the interest of depositors, extend the period of 7 years by any period not exceeding 5 years. Third one is management. According to the section 10 subsection A, it states that not less than 51% of the total number of members of the board of directors of a banking company shall consist of persons who have special knowledge or practical experience in one or more of the following fields. The fields are accountancy, agriculture and rural economy, banking, corporation, economics, finance, law, and small scale industry. This section also states that at least not less than 2 directors should have special knowledge or practical experience relating to agricultural and rural economy and cooperation. Section 10, subsection B 1 further states that every banking company shall have one of its directors as the chairman of its board of directors. Fourth one is minimum capital and reserves. Section 2 of the Banking Regulation Act 1949 provides that no banking company shall commence or carry on business in India unless it has minimum paid up capital and reserve of such aggregate value as it noted below. So A part is foreign banking companies. In case of banking company incorporated outside India, its paid up capital and reserve shall not be less than rupees 15 lakhs, and if it has a place of business in Mumbai or Kolkata or in both, rupees 20 lakhs. It must deposit and keep with the RBI either in cash or in encumbered approved securities. The amount as required above, and second one is the after the expiry of each calendar year, an amount equal to 20% of its profits for the year in respect of its Indian business. B part is Indian banking companies. In case of an Indian banking company, the sum of its paid up capital and reserve shall not be less than the amount stated below. First, if it has a place of business in more than one state, rupees 5 lakhs, and if any such place of business is in Mumbai or Kolkata, or in both, it's rupees 10 lakhs. Second, if it has all its places of business in one state, none of which is in Mumbai or Kolkata, rupees 1 lakh in respect of its principal place of business plus rupees 10,000 in respect of each of its other places of business in the same district in which it has its principal place of business plus rupees 25,000 in respect of each place of business elsewhere in the state. Third, if it has all its places of business in one state, one or more of which are in Mumbai or Kolkata, rupees 5 lakhs plus rupees 25,000 in respect of each place of business outside Mumbai or Kolkata. No such banking company shall be required to have paid up capital and reserve excluding rupees 10 lakhs. Fifth is capital structure. According to section 12, no banking company can carry on business in India unless it satisfies the following conditions. Its subscribed capital is not less than half of its authorized capital and its paid up capital is not less than half of its subscribed capital. B part. Its capital consists of ordinary shares only or ordinary or equity shares and such preference shares as may have been issued prior to 1st April 1944. This restriction does not apply to a banking company incorporated before 15 Jan 1937. C. The voting rights of any shareholder shall not exceed 5% of the total voting rights of all the shareholders of the company. Sixth is the payment of commission, brokerage, etc. According to section 13, a banking company is not permitted to pay directly or indirectly by way of commission, brokerage, discount or remuneration on issue of its shares in excess of 2% of the paid up value of the shares. Then comes payment of dividend. According to the section 15, no banking company shall pay any dividend on its shares unless all its capital expenses, including preliminary expenses, organization expenses, share selling commission, brokerage, amount of losses incurred, and other items of expenditure not represented by tangible assets have been completely written off. But a banking company need not write off depreciation in the value of its investment in approved securities in any case where such depreciation has not actually been capitalized or otherwise accounted for a loss. B. Write off depreciation in the value of its investment in shares, debentures, or bonds in any case where adequate provision for such depreciation has been made to the satisfaction of the auditor. C. Write off bad debts in any case where adequate provision for such debts has been made to the satisfaction of the auditors of the banking company. Seventh is reserve funds. According to section 17, every banking company incorporated in India shall, before declaring a dividend, transfer a sum equal to 20% of the net profits of each year, as disclosed by its profit and loss account, to a reserve fund. The central government may, however, on the recommendation of RBI, exempt it from the requirement for a specified period. The exemption is granted if its exercise reserve fund together with share premium account is not less than its paid up capital. If it appropriates any sum for the reserve fund or the share premium account, it shall within 21 days from the date of such appropriation report the fact to the Reserve Bank explaining the circumstance related to such appropriation. Eighth is cash reserve. Under Section 18 of the Banking Regulation Act, every banking company not being a scheduled bank shall, if Indian, maintain in India by way of a cash reserve in cash with itself or in current account with the Reserve Bank or the State Bank of India or any other bank notified by the central government on its behalf, a sum equal to at least 3% of its time and demand liabilities in India. The Reserve Bank has the power to regulate the percentage also between 3% and 15% in case of scheduled banks. Besides the above, there are to maintain a minimum of 25% of its total time and demand liabilities in cash, gold, or unencumbered approved securities. But every banking company's asset in India should not be less than 75% of its time and demand liabilities in India as the close of last Friday of every quarter. Then comes liquidity norms. According to Section 24 of the Act, banking companies must maintain sufficient liquid assets in the normal course of business. This section states that every banking company has to maintain in cash, gold, or unencumbered approved securities an amount not less than 20% of its demand and time liabilities in India. This percentage may be changed by the RBI from time to time according to the economic circumstances of the country. This is in addition to the average daily balance maintained by a bank. 10. Restrictions on loans and advances. Section 20. After the amendment of the Act 1968, a bank cannot first grant loans or advances on the security of its own shares. Second, grant or agree to grant a loan or advance to or on behalf of any of its directors, any firm in which any of its directors is interested as partner, manager, or guarantor, any company of which any of its directors is a director, manager, employee, or guarantor, or in which he holds substantial interest, or any individual in respect of whom any of its director is a partner or guarantor. Note: 2C does not apply to subsidiaries of the banking company registered under Section 25 of the Companies Act or a government company. 11th. Accounts and audit. Section 29 to Section 34A. The above sections of the Banking Regulation Act deal with the accounts and audit. Every banking company incorporated in India at the end of financial year expiring a period of 12 months as the central government may be notification in the official gazette specified must prepare a balance sheet and a profit and loss account as on the last working day of that year or according to the third schedule or as circumstances permit. At the same time, every banking company which is incorporated outside India is required to prepare a balance sheet and also a profit and loss account relating to its branch in India. Also, we know that Form A of the third schedule deals with form of balance sheet and Form B of the third schedule deals with the form of profit and loss account. Now we come to the Reserve Bank of India Act 1934. So this act is the legislative act under which the Reserve Bank of India was framed. This act, along with the Companies Act, which was amended in 1936, were meant to provide a framework for the supervision of banking firms in India. The act contains the definition of the so-called scheduled banks as they are mentioned in the second schedule of the act. These are banks which were to have paid up capital and reserve above 5 lakhs. Coming to the provisions of this act, first we have Section 3, Establishment and Incorporation of Reserve Bank, and Section 4 of RBI Act 1934, which is Capital of the Bank. So Section 3 states that Establishment and Incorporation of Reserve Bank, a bank to be called the Reserve Bank of India, shall be constituted for the purposes of taking over the management of the currency from the first central government and of carrying on the business of banking in accordance with the provisions of this act. Second, the bank shall be a body corporate by the name of the Reserve Bank of India, having perpetual succession and a common seal, and shall by the said name sue and be sued. Section 4 states that the capital of the bank shall be 5 crores of rupees. Section 6 of RBI Act 1934. Offices, branches and agencies. The bank shall, as soon as may be established, offices in Bombay, Calcutta, Delhi and Madras, and may establish branches or agencies in any other place in India or with the previous sanction of the central government elsewhere. Section 7 of the RBI Act 1934. Management. The central government may from time to time give such directions to the bank as it may, after consultation with the governor of the bank, consider necessary in the public interest. Subject to any such directions, the general superintendence and directions of the affairs and business of the bank shall be entrusted to a central board of directors, which may exercise all powers and do all acts and things which may be exercised or done by the bank. Third, save as otherwise provided in regulations made by the central board, the governor, and in his absence the deputy governor nominated by him in this behalf, shall also have powers of general superintendence and directions of the affairs and the business of the bank, and may exercise all powers and do all acts and things which may be exercised or done by the bank. Section 8 of the RBI Act 1934. Composition of the central board and term of office of directors. The central board shall consist of the following directors, namely: A. A governor and not more than 4 deputy governors to be appointed by the central government. B. 4 directors to be nominated by the central government, one from each of the 4 local boards as constituted by Section 9. 10 directors to be nominated by the central government and 2 government officials to be nominated by the central government. Section 9 of RBI Act 1934. Local boards, their constitution and functions. A local board shall be constituted for each of the four areas specified in the first schedule and shall consist of 5 members to be appointed by the central government to represent as far as possible territorial and economic interests and the interests of cooperative and indigenous banks. The member of the local board shall elect from amongst themselves one person to be the chairman of the board. Every member of a local board shall hold office for a term of 4 years and shall be eligible for reappointment, provided that any such member shall not be appointed for more than 2 terms, that is, for a maximum period of 8 years, either continuously or intermittently. 4. A local board shall advise the central board on such matters as may be generally or specifically referred to it and shall perform such duties as the central board may delegate to it. Section 10 of the RBI Act 1934. Disqualifications of directors and members of local boards. No person may be a director or a member of a local board who A. is a salaried government official, or B. is or at the time has been adjudicated or an insolvent, or has suspended payment, or has compounded with his creditors, or C. is found lunatic or becomes of unsound mind, or D. is an officer or an employee of the bank, or E. is the director of a banking company within the meaning of clause C of section 5 of the Banking Regulation Act 1949, or of a cooperative bank. No two persons who are partners of the same mercantile firm or are directors of the same private company, or one of whom is the general agent of or holds a power of procuration from the other, or from a mercantile firm of which the other is a partner, may be directors or members of the same local board at the same time. Section 11 of the RBI Act 1934. Removal from and vacation of office. The central government may remove from office the governor or a deputy governor or any other director or any member of a local board. Second, a director nominated under clause B or clause C of subsection 1 of section 8 shall cease to hold office if without leave from the central board he absents himself from 3 consecutive meetings of the board convened under subsection 1 of section 13. A director or member of a local board removed or ceasing to hold office under the foregoing subsection shall not be eligible for reappointment, either as director or as a member of a local board, until the expiry of the terms for which his appointment was made. Fifth, the nomination as director or member of a local board or any person who is a member of parliament or the legislature of any state shall be void unless within 2 months of the date of his nomination he ceases to be such member, and if any director or member of a local board is elected or nominated as a member of parliament or any such legislature, he shall cease to be a director or member of the local board as from the date of such election or nomination as the case may be. Sixth, a director may resign his office to the central government and a member of a local board may resign his office to the central board, and on the acceptance of the resignation the office shall become vacant. Section 13 of RBI Act 1934. Meetings of the Central Board. Meetings of the Central Board shall be convened by the Governor at least 6 times in each year and at least once in each quarter. Any 4 directors may require the Governor to convene a meeting of the Central Board at any time, and the Governor shall forthwith convene a meeting accordingly. The Governor, or if for any reason he is unable to attend, the Deputy Governor authorized by the Governor under the provision to subsection 3 of section 8 to vote for him shall preside at meetings of the Central Board, and in the event of an equality of votes shall have a second or casting vote. Section 18 of the RBI Act 1934. Power of direct discount. When in the opinion of the bank a special occasion has arisen making it necessary or expedient that action should be taken under this section for the purposes of regulating credit in the interest of Indian trade, commerce, industry and agriculture, the bank may, notwithstanding any limitation contained in section 17, purchase, sell or discount any bill of exchange or promissory note through such bill, or promissory note is not eligible for purchase or discount by the bank under that section. Or second, make loans or advances to a state cooperative bank or B, on the recommendation of a state cooperative bank to a cooperative society registered within the area in which the state cooperative bank operates, or C, any other person repayable on demand or on the expiry of fixed periods not exceeding 90 days on such terms and conditions as the bank may consider to be sufficient. Section 19 of the RBI Act 1934, business which the bank may not transact. Save as otherwise provided in the sections 17, 18, and 45, the bank may not: first, engage in trade or otherwise have a direct interest in any commercial, industrial, or other undertaking, except such interest as it may in any way acquire in the course of the satisfaction of any of its claims, provided that all such interest shall be disposed of at the earliest possible moment. Purchase the shares of any banking company or of any other company or grant loans upon the security of any such shares. Third, advance money on mortgage of or otherwise on the security of immovable property or documents of the title relating thereto, or become the owner of immovable property except so far as is necessary for its own business premises and residences for its officers and servants. Make loans or advances. Fifth, draw or accept bill payable otherwise than on demand. 6. Allow interest on deposits or current accounts.